Welcome to the Mortgage Wise radio show and video podcast, where we educate and provide expert advice on personal finance, mortgages, and real estate investing.
Show me the money.
As a result of what we do, our team has helped hundreds of first-time buyers, experienced buyers, and real estate investors achieve their goals of home ownership.
I wonder if there's a connection there.
Here are your executive producers and mortgage advisors, Randy and Veronica Chambliss.
What up, what up, what up, what up, everybody? Welcome to another episode of the Mortgage Wise radio show. I am super excited, guys. This is episode, I think, 16 or something like that, I want to say. So since January, guys, January 21st, it was an idea. Veronica had thought about it a while back. We finally was able to put this podcast and video show together. And so we've been having some great success, a lot of great content. So listen, guys, I am Randy Chambliss. I'm the Executive Director of the Louisiana Housing Authority. And also, I'm a Corporate Branch Manager with Geneva Financial. And I have to my right.
I am Veronica Chambliss. I'm also a Branch Manager with Geneva Financial, and I'm the Director of Housing with Louisiana Housing Authority. So today, guys, we're going to discuss questions that a mortgage lender will ask regarding purchasing their home, so that you're prepared, right? Because it can be intimidating.
Absolutely.
So applying for a home loan can be an intimidating thing. You know, lenders are going to ask a lot of questions, request numerous documents, and it's probably going to feel like basically you got to jump through hoops to get a home loan, or you may feel a little interrogated, right? If you are like many home buyers that's looking to purchase a home and you need a home loan, then that means going through the lending questions and answer process is inevitable. Fortunately, applying for a home loan is not as bad as it might first appear. Sure, it can be very stressful answering questions about your personal finances, especially when relative strangers are doing the asking, right? But with this episode, you can know what questions to expect and what kind of answers lenders will be looking for. And I mean, I'll be the first one to attest. When I first went to go and purchase a home, to inquire about purchasing a home, I was intimidated. I had just finished college, and I figured, okay, let me just go and apply for a home loan, possibly get a double for me and my brother. So he lived on one side, I live on the other side, and we could split the mortgage. But I was intimidated by the questions. And at that time, I mean, I was still young. I was afraid to ask more questions. And I ran away from it, and I got discouraged and didn't look back.
Right. And oftentimes that's what happens because, you know, people want to avoid pain and acquire pleasure, right? We want to do that. And so when you're faced in a situation that is fearful, you're afraid, you don't have an understanding, then you tend to kind of shrink back into that comfort zone. But, you know, that's one of the reasons why, you know, we enjoy doing these video podcasts and this radio show, because, you know, it gives us a platform where we can help people educate themselves, because when you know what the next steps are, when you know what to expect, right, then you're more comfortable, you're more calm, right? And it allows you to build up your confidence so you can go out and actually buy that house, because it is tough, right? It is some challenges. But if you have the right mentors and the right people that can guide you through that process, and like I mentioned, mentors, right? A coach that can coach you through it, then it just makes it a lot easier. So listen, guys, let's just dive into some of these questions, because these questions is what lenders are going to ask you, right? So we're going to ask some questions, right? And then we're going to kind of expound on some of those questions as we feel fit. So what is that first one, Veronica?
So the first one, we always try to figure out the purpose of this loan. Like, what do you plan to do? Are you planning to live in a property, or are you purchasing this property for investment property, right?
Correct. Absolutely.
And that also determines how much you have to put down. And that's the reason why the lender wants to know the purpose of the purchase.
Absolutely. That way they can know exactly how to best navigate you. So the first question is going to be, you know, are you planning on living in a home, occupying as your residence, or is this going to be an investment property? That's the first question, right? Then after you give that answer, let's say it is, hey, I'm going to be living in the house for my family. I'm going to be occupying. Okay, great. And that leads us to that next question. What's that next question?
The next question would be, well, what is your credit score? Do you have an idea what your credit score is?
Absolutely. Now, these questions are not literally in order, right? But you can expect these questions are going to come out throughout that conversation, or when you give us a call throughout that consultation, right? That free consultation is going to come up. So you want to know what your credit score is, because that's a very, very important key of you being qualified or not qualified. It's a key point knowing that if you're going with a conventional loan, would that be the best strategy, or FHA loan?
That was what I was about to say. So basically, we need to know the answers to these questions so that we can know what loan program will fit you and your needs.
Absolutely. And so if you say, well, I'm probably about a 580 or I'm at a 560 or some sort. Well, at that point, the lender know, okay, they may not be able to qualify right now, but let me finish asking these questions so I could dig a little deeper, so I can give them a game plan to follow. Because that might be just the only thing that's holding them back, is just their credit score. Well, the credit score can be raised, right? I tell my story all the time. You guys know me. I've seen some of the past videos we did. You know, in Hurricane Katrina, I was 25 years old. I became homeless and I was broke, busted, and broken. I hit rock bottom, right? My credit score was horrible. I tell anybody, right? It was in the low 500, but I got it together, right? Because I followed a plan. I had somebody that mentored me, told me what I needed to do, and I went and done it. And so that's why we want to ask that question. What's your credit score, right? Now, if you say, hey, my credit score is 620, 625, 640, then the next question that I'm going to ask is going to be, where did you get that? What resource you used to get that credit score?
Very important. Why? Because Credit Karma is trash. Period.
Right. So Credit Karma is good, right? It's good in the way for you to be able to see what's on your report, but not for the credit score.
Not to qualify, right?
Not for credit score. You know, but if you want to see what's on there, you know, what accounts that's on it, what's late, you know, what's positive, that's good, because you give it access. But typically Credit Karma is off like a lot. Sometimes it might be 30, 40 points. Sometimes it's 90, 80 points, right? For example, Credit Karma might say, oh, you're a 680, but when we actually pull that score, your lender pull that score, you might be at a 590, right? It's a big difference.
And sometimes, and you know, they're not always right, but they're not always wrong, I guess. Because sometimes, I mean, it rarely happens, but I did have a client that told me she had her credit score from Credit Karma and it was like a 720. So at that point, I knew she had a high, you know, had to be in that range or higher. And when we pulled it, it was actually higher. So
and I can agree with that. You know, if somebody tell me, hey, I got it from Credit Karma, I'm a 680, then I'm kind of in my mind thinking that it might be at a 630, 640, which still is a qualifying score, right? So what we do recommend, right, is MyFICO, right? MyFICO.com, myfico.com, right? You go there, yes, they do charge you, right? But it's one of the closest scores that you can pull, and you're looking for your mortgage score, right? MyFICO have different scores. You have insurance provider scores, you have automobile loan scores, you have mortgage scores.
Credit card scores.
Right, credit card scores. So you particularly want to seek out your mortgage scores, right? Another resource is privacyguard.com, like you guarding something, right? Privacyguard.com. They do charge $1, right? It's a 14-day trial period. You get access to all 3 credit reports and all 3 credit bureaus.
Cancel after 14 days.
Right. You could certainly cancel after 14 days, right? But totally up to you. But at least you get those 3 scores, and they're a little bit more better and reliable than Credit Karma. That's just my note. No, not bashing Credit Karma. It's just you know, they're good for the source they use to pull reports. So the credit score question is very, very important to determine if we're going to be moving forward, or do we need to give you a personal financial plan so you can move forward in the future. So,
and since we're talking about credit score, I just want to insert here that if you are in a situation where you currently have collections on your credit report, do not pay off those collections without first talking to your lender, because it's not always required to be paid off unless the underwriter says, hey, I need this paid off by closing. Or unless we tell you, listen, you know, you need a game plan for these collections because it's so many or whatever. But talk to us first and get your game plan, then you know what actions to take.
Right, exactly. And you can save yourself a ton of money. You're about to pay this collection that you've been on for 6 years and it's $3,000 and now you pay it and it actually made your credit score worse, right?
Exactly.
Believe it or not, that happens. You pay off a debt and the credit score actually drop, right? So that's the question for credit score. The next question, guys, is what you have to be ready to have to expect is, are you self-employed or are you employed by someone, right? Or are you self-employed, or if you are employed by someone? That's going to be a question. Why? Because there's certain guidelines that self-employed individuals need to follow versus a person that's employed by someone, right? And we just need to know that, right? Now, what if you are self-employed? Like, what would be the next question? So just bear with us for a moment. Let's think of this at a crossroad, right? That question is asked, you answer, hey, I'm self-employed. What's a question, next question for a self-employed borrower that we might ask, Veronica?
The first thing I would ask is about your tax returns. How much do you claim on your taxes? Not before you take off expenses, after expenses. So I asked for your net after.
Okay.
So that's the difference between the two. You have an employed person where we use the gross, that's before taxes are taken out. And you have the self-employed person where we use the net. That's after all your expenses are paid, right?
Right, absolutely. So if that self-employed person tells us, oh, I showed a net of $10,000 for the year, then most likely they're not going to qualify because of the debt to income ratio, right? So that's a critical thing when you're self-employed. Just a quick tip: you want to put yourself in preparation for buying your home, right?
Right.
Because we're going to be asking for how many years that we're asked for a tax return?
Most of the time it's the last 2 years, but in some cases we may be able to do 1 year. But of course, that comes with other determining factors.
Right.
Also with the what I was about to say about that.
Dealing with the self-employed.
Oh, that's what it was. Yeah, some people, they don't want to pay Uncle Sam all the taxes back.
And we get that.
And we get it. I don't either. However, they force us to do business with our, the consumers that's looking for mortgages the way you do business with them. Because you're coming to them, asking them in most cases to back your loan because, for example, FHA loan or VA loan or USDA loan, which is the rural development loan, is backed by the federal government. So if you're telling them, hey, I only made 10,000, but you're telling me on your application you make 80,000, and the two is not matching up. So they want us to look at the tax returns to determine your income. Now, again, you don't want to pay Uncle Sam the taxes. Well, that's a conversation you should have with your tax preparer. What are the different strategies I can do during the year to reduce my tax liabilities? Like, for example, and we're not giving tax advice, we're not tax preparers or CPAs. But one of the questions is, and I saw a young lady that I follow on Instagram that's here locally in New Orleans. She's a CPA, and she made a post the other day that I shared a few weeks ago about, hey, did you know you can pay your children, on a payroll, a salary, and that helps to reduce your tax liability. So that's a question you want to propose to your tax preparer or CPA.
You're gonna pay things for your children anyway. Why are you gonna buy them clothes? You're gonna buy them some food. You're gonna go out to dinner, right?
Right. So you might as well pay them, but do it the right way. So that's why you have to ask your tax preparer what's the proper way to do those things. And there's some other things you can do too. Just want to have that conversation.
Absolutely. So that's that veer for a self-employed. Now, if that person say, hey, I am employed by someone, then the next question is going to be, how long have you been employed with your current employer, right? Because what we're trying to determine is, do you have a 2-year work history?
Are you stable on your job?
Right. That's the determining factor, right? So that person said, yep, I am employed by someone. Oftentimes people just blurt it out quickly, right? I've been employed for 15 years. Okay, we good. I don't need that extra question. Some people might say, oh yeah, I'm employed. Okay, my next question is gonna be, how long have you been there? Okay, great. If it's less than 2 years, the next follow-up question is, Well, where did you work prior to that company? How long was you there, right?
Mm-hmm. Yeah. Or some people, if you were in school when you recently graduated, then as long as you're working in your field, you can be there for 6 months. As long as you're in your field, we can use your tax transcripts to prove that, hey, I was in school, I graduated, and now I'm working in my field.
Correct.
Yeah.
Absolutely. So that's the next question. That way we can find out what direction we need to go.
Right. So that's why we ask these questions to know how to help you and navigate you through this process.
Right.
Period.
Now, this next question is a biggie, right? Now, a while back, we really didn't ask this question, but it's so big right now that it's prevalent that we ask the question. That question is, do you have any student loans, right? Do you have any student loans, right? Because the big determining factor is oftentimes, especially in the midst of COVID, right, 19 right now, some of those student loan companies have allowed deferment, right? Well, I'm in the deferment. Okay, great. Some people still in
Forbearance,
school.
yeah.
Yeah, forbearance, right. Some people in school, so there's a deferred, meaning that they're not paying a monthly payment on it.
Right.
But from your lender, great,
no, I was about to say, so you will automatically think that, hey, okay, I'm not paying nothing on that as in deferment, so you shouldn't have to count that.
Right,
but,
that's the thinking.
Right.
But unfortunately, it doesn't work like that. That lender wants to know, okay, when you do start paying, what that payment is going to be, right? So they will count that, because we know as of right now, student loans still exist. You can't bankrupt it. You can't do nothing. You have to pay those student loans. So you could defer by staying in school, but at some point, you're going to have to start paying. And so that lender want to know, okay, I know you're in school, but I need you to find out from your student loan company, what will your monthly payment be, right, if you were not in school, right? Now, if you qualify for a conventional loan, right, if you qualify for conventional loan, we can actually use that monthly amount that they give you, long as on a letterhead and we have something in writing, right? We can use that amount. So if it's, if you have $120,000 worth of student loan and they say, hey, you're only going to be paying $300 a month, then we can use that monthly payment of $300 a month.
Versus $1,200 a month.
Right, versus
1%.
That's right. And the 1% comes from FHA. So if you only qualify for FHA, meaning that you can't get qualified conventional, because whatever those variables are, right, then you have to go FHA. FHA doesn't matter what your monthly payment is going to be in the future. It doesn't matter if it's actually in writing on a letterhead. There's still the guidelines currently right now in this video, you're still going to be required to use 1% of your total balance of your student loan. And like Veronica just mentioned, in our example, if you have $120,000 worth of student loan, 1% of that is $1,200 a month, right? That's a debt that goes against your DTI, debt to income ratio. Some people might only have $20,000 in student loan. Well, 1% of that would be just $200. So that's a critical factor to know, because some people might not qualify because of the student loans, because the expense of it is so high. So that's going to be one of the major questions. The other question that we have in relationship today is, do you have any auto loans, right? And that's a major question, because that's a big ticket item, right? Your mortgage payment is a big ticket, student loans is a big ticket, and then also automobiles, because we see some people have automobiles be $800 a month, right? $900 a month or more, and that's the actually house note, right? So we always say all the time in our financial wellness classes that we have is that buy your house before the car, right? Buy the house before the car, right? I get it, the motor went out, I get it, you have problems with the car, I get it, you have to get around, but do your best to not get in such deep debt where it's so expensive that you can't buy a house, right? So if you can, buy cash. If not, buy something cheap. Once you get those keys in your hands, like once you close, you can upgrade all day, because I get it. Nobody want to bring that old beat up car to the new home in the driveway, right? I get it, right? Nobody want to bring them old furnitures into the new house. They want new furnitures, new cars. I get it, but get your keys first for the house, right?
Yeah.
So that is the next question. So what's the next question? Let's go. What's the next one?
The next one is, we would like to know what's a comfortable mortgage payment for you, right? Because we don't want to okay, so purchasing a home is already overwhelming, right? But we want to make sure you're comfortable, because some people might be, renting, paying $900 a month, $800 a month, but then when you get a mortgage, you may find you a house that's 185,000, 200,000, 250, and then you're looking at a mortgage payment up to about $1,100, $1,300. So that's a major determining factor in what's a comfortable mortgage payment for you, because that way we can use that number to pre-qualify you for that range, that price range, so you can know kind of what area you're shopping in.
Right. So that way you're comfortable, right? So we're gonna do the due diligence on our end, right? We have a certain formula that we use to see, can you afford the house, right? And that's one of the reasons why that debt to income ratio is so important, meaning that your income coming in monthly, right? If you are self-employed, then that's that net income. If you're employed by someone, that's that gross income, right? Versus what's on your credit report, right? We're not counting things like your mortgage, your mobile phone, right?
Right, your car insurance.
Your car insurance, your energy bill, your gas bill. We're not counting those type of expenses. We're looking what's on that credit report. And what's on that credit report, it gives that monthly payment, and we use that to find out what your debt's quote, right, to income ratio is. And that tells us what's the max loan amount you can afford. So we'll have that number for you. So let's say that, the max will be, like you say, about 185,000. I don't know, let's say it's $1,100, $1,200 a month for everything, all your mortgage payment, right? Taxes, principal, interest, tax, and insurance, right? But you might say, okay, yeah, I qualify for 180. I see it's $1,100, $1,200 a month, but I'm only comfortable with $900 a month. Then we know we'll bring that number down so you're comfortable making the mortgage payment. Because we only want you to obtain a house, we want you to keep the house, right? We don't want you struggling and stressed and worried, because we know we teach all the time that stress lowers the immune system. So we want to have you in a happy state, right? The word belief, right? A lot of people hear it all the time. We talk about it, belief. But listen, words actually mean things. When you take the BE and separate the BE and leave leaf, L-I-E-F, you go look that up. That word means be happy. Excuse me, that word means happy. So when you add in the B to happy, that means be happy, right? So you want to get yourself in a good state, a good happy state, right? Watch some funny movies, stay in a happy zone. That way your immune system is boosted up as high as possibly can, right? So you want to be able to have yourself with a comfortable mortgage payment. We want to know that. The next question is going to be how much do you have saved so far for your down payment on your home? Not including your monthly bill money, right? But what do you have set aside strictly in savings for your home, right? For example, you might have $8,000 saved, or you might have $30,000 saved, but that is for your monthly bills, right? So we don't want that to happen, because what happens is at the end, right, it might take you 25 days to close. It might take you 30 days to close. I don't know, 40 days to close, whatever it takes you to close. And if you tell your lender that you have $10,000 saved total and $5,000 was for your bills, now you didn't pay your bills for that month, you have only $5,000 left. So now you didn't have a contract on the house, you paid for an appraisal, you pay for a home inspection, you and your realtor partner been working together, you and the lender been working together, you got all this going on, right? And all of a sudden, when we go to get that clear to close, meaning that last bit of information so we could get that clear to close, and all of a sudden, you only have $5,000 in the bank account. Like, whoa, what happened? You said you had 10. Oh, that's my bill money. So we always try to make that clear. How much do you have saved up for your down payment on your home, not including your bill money, right? So what you want to be prepared for that, guys. What's that next question?
So another question that's so important, and this is asked on your application as well, is do you owe any federal debt that's in default, right? Did you default on any government loans? That is critical, because then that's also another determining factor on which loan product we're going to use. We cannot use a government loan. If you owe the government, you can't expect them to back you on your loan, right? So when you ask those questions, when we ask those questions and you answer honestly, you have to be honest with your loan officer. I mean, we can't help you no other way. Unless you're honest, right? So people always say, well, look, I'm just going to be transparent with you. I'm like, please, you have to.
That'd be nice.
That helped me to help you.
Right.
So
Say that again.
That helps me to help you. So, I mean, so if you have a loan that's defaulted, chances are, sometimes I recently had a situation where it did not show on the credit report. However, we have other reports that people don't know about that's being pulled. So when a process is going to do those reports to see if your name is on the government list, guess what? If it pops up, we can't unsee it. So now we have to include that, even if we switch to loan type. But if you be honest in the beginning, we can start off on the right foot.
Yes.
Right.
It's a strategy. Like Veronica, that's why we use consultation. We do free consultation because we want to know, how can we help? How can we serve you? You may not be ready yet, and that's okay, right?
And I know people don't want to hear that,
no,
but
absolutely. And we get it. But we're going to give you a financial personal game plan to follow to get ready, because you want to buy your house on truth and justice, right? You don't want to buy a house no other way, because if you do it and something come up in the future, now you're at risk of being sued, losing the house, going to jail, et cetera, et cetera. You want to be comfortable, right? So build it on truth and justice. Now, us as lenders, right? We're on your side, right? We want you to win. But we know we're looking for borrowers that give us a low risk. If you're a high risk borrower, then it's highly that you might default on a loan, right? And nobody wins out of that deal. And so look at your mortgage lender, that loan originator, as like your attorney, right? Your attorney, you paid thousands and thousands and thousands of dollars for retainer fee because they that good, right? And so if your attorney is going to represent you, don't you think your attorney need to know the full truth, nothing but the truth? Yes, that's the only way that they can help navigate you through that process, help you grow through that situation. And it's the same thing with your mortgage lender. That originator is there to find out details. And we, like Veronica mentioned at the very beginning, we know it's uncomfortable, right? You don't even know this loan officer, but you have to reveal your finances. Well, that's the things that you have to do to be able to get a loan. Unless you got cash, you don't have to worry about that. It's a done deal, right?
Yep. And that's why you have to work with too and find a loan officer that you can trust, somebody that you're comfortable with opening up to.
Correct. Because you got to have somebody that, like you said, you can trust, who's skillful, who's knowledgeable, who have experience. And so that way they can find that best financial strategy for you. That's what it's all about. This is creative thinking, right? Sometimes Veronica and I get together on files and say, okay, we have this person, their credit score is this, they have this going on. And say, okay, well, how can we help them? That's our thought. Not, okay, how can we deny?
Right.
Right. The thought is, okay, how can we help them? What do we need to do? And as we brainstorm and think through creatively, oftentimes we'll find a solution. Say, oh, we got it. We can use this product and we could do this. We could bring that. And then we can put the pieces together and we can make it work, right? We have a lot of people we've done that with, right? Yeah. So that's going to be a major question right there. Is there another question?
No, that's about it.
So listen, guys, that was the question that you can expect that your lender will ask you. So, rewatch this video, write it down, take some notes, so that way you're comfortable when you call in that mortgage lender. As we wrap up today, I'm Randy Chambliss. You guys can find me on Facebook or Instagram at Mr. Randy Chambliss. My direct number is 504-270-2783. You can also find me online at randyknowsmortgages.com.
And I'm Veronica Chambliss. You can find me online under Veronica Chambliss. Social media under Veronica Chambliss. My direct contact number is 504-715-4388. You can also get me online at knowsmortgages.com.
All right, guys. So schedule that free consultation. God bless. Have a great day.
And share this video.
Absolutely.
Don't keep this information to yourself.
Right. Don't do that. Be wise, right? Be mortgage wise. Have a great night, everybody.
Good night.
That brings today's show to a close.
Oh, come on!
Thank you for listening to the Mortgage Wise radio show and video podcast. If you enjoyed this episode, feel free to share it with a friend and subscribe. Please follow us on YouTube, Instagram, and Facebook at the Mortgage Wise Radio Show. If you want to learn more about what we talked about today, give us a call at 504-270-2783. Or to view our podcast library, please visit our website, themortgagewiseradioshow.com.
Autobots, roll out!
Until next time, choose to have a great day on purchase, Mortgage Wise friends.
Go home.